Hello, everyone. Welcome to our weekly live, and we have Jen Duplessis. She's going to actually run this Facebook live. I'm just going to do a brief introduction. So, welcome to our weekly Wisdom Live, brought to you by WOIII, Women of Impact and Innovation International, honoring wisdom while building the next generation of innovative women leaders. Each month, we'll be focusing on one topic, and each week, we'll be diving into different aspects of that topic. I will let Jen introduce our topic, and she will take it from here.
Thank you so much, Sabrina. Hi, everybody. It's Jen Duplessis. I don't know, I'm trying to fix my hair here now, too, because I don't know which way I am. This month, we are all about financial literacy and, really just growing our number one, and it's interesting because I am the leader of the Wealth and Investments Ambassador Board, and we were just talking about putting together, an event later on this year. It'll probably be in September sometime, where we're putting an event together about financial literacy. And as women, it's not it's not something that we're always really aware of. Now, some of us have been in financial services for 40 years, but many people don't know, a lot about financial literacy. And so I love that this month is something that all of us, all of the members of WOIII have been sharing the various types of literacy and financial education to help everybody. So I hope that we've all done that, because I know this is one of the last ones that we're having this month. But I have a guest coming in. I believe she's going to be coming in. I hope she's going to be coming in. If she doesn't, that's okay. Her name is Ava Scott. She is a financial advisor, and she was going to be talking about tax-free passive income. And if we can get her in, that'll be great. The reason I
Oh,
wanted to talk with you today, and there she is. She is here. So
yeah, I just was.
hi,
I
you. Thank you so much for coming in. I appreciate that. We are live. It's good to see you. I was
Good
just
to see you
telling
too.
Yeah, I was just telling everybody a little bit about our theme, this month of financial literacy and education. And, one of the reasons why this is so important to me, not only because I've been in financial services for 40 years, 40 years, in March it was 40 years, but also because I wanted to do it at this specific time of the month, because you can probably hear some background noise, etc. I'm actually in San Diego at the San Diego Bay, and I don't know if you can even see that there.
It's
We just got
beautiful.
we just got off a boat. I happen to be a captain, and I have a license, so we just got off a boat. That's why I look like I do. But we just got off a boat. We've been on the boat for the last 3 or 4 hours, just you know, networking and helping solve each other's problems, having a good time, seeing the sights, etc. And the reason why I did that in particular is to just share that, what we're trying to do in this particular month, and what we're trying to do on in our ambassador board, is to help women understand that, yes, we're working 9 to 5, but we don't have to work 9 to 5 until we're 65, right? And being able to take time out of your day. And we had, 5 or 6 people on the boat with me, and being able to have that financial freedom to, you know, fly to San Diego. I'm from Virginia. Fly to San Diego. I wonder if I can capture the airplanes behind me. Fly to San Diego, rent a boat, and then be out on the water for the afternoon, but still be working. Still be working. And so that's something that is near and dear to my heart, because I love passive income. I love passive income. Um, so, Ava, let's talk about a little bit about what you do, because you're a financial advisor. Why don't you go ahead and introduce yourself? I mean, we've known each other for, gosh,
For
maybe,
years.
I
Yeah,
don't even know, 10 plus years.
yeah. So I work. My name is Eva Scott. I was born in Barcelona, Spain, grew up in Spain, came here in my 20s, and I'm a lawyer. I'm a lawyer, but I decided to go into financial services because of the flexibility. Lawyers, they work like all day. I wanted to have the flexibility, and I also wanted to truly, through my knowledge and through my exposure in this industry, catapult my family into a lifestyle. And I'm in New York right now. I'm in Fifth Avenue, actually. You can see all the high. I'm
Yeah.
in New York. I just participated today in a mastermind. I was chosen to go to the university club and participate in a mastermind. So I do a lot of training, and I am a very out of the box financial advisor. I specialize in tax-free retirement strategies. I always tell people that the diversification doesn't just mean, choosing different stocks. You have to choose like different species of investments. Like, I wholeheartedly believe in real estate. I started as a loan officer back in the day, had a
Yeah.
son in 2007, and then I never went back after 2008 because it was just, the whole thing crisis. And then I went into traditional investing. But like, you have to have real estate. But, as Grant Cardone says, you have to own where you rent and rent where you live, kind of thing, which I don't. I own my house, but I also believe that you have to invest in real estate that you can rent or you can Airbnb. There's now Airbnb arbitrage where you don't even have to own the place where you Airbnb. There's a
Right.
whole lot of options when it comes to real estate. That real estate is a really phenomenal way to create passive income. And I'm sure that Jen has homes. I don't even know what you have, but I know a lot of people that invest in real estate. You fix it up and you hold it and you rent it, and that creates passive income. Another way is not just investing in your 401ks. I mean, absolutely, if your employer does a 401k and they do a match, it's free money. Take the free money, right? Take the
Yeah.
free
Yeah.
money.
Yeah.
Um, you always have to contribute to whatever the match is. You do up to the match, but that is a tax deferred vehicle. So that's the other bucket. You have a tax free, tax deferred, and taxable bucket.
Right.
Taxable bucket would be your real estate or your stocks. You buy them for X, you sell them for Y. You pay different. That you pay a capital gains on the difference. I do wholeheartedly believe that besides, the real estate, you have to invest in tax-free buckets. Most of us, like if you're a high net worth, income person, do not qualify to do a Roth, right? Because the Roth, there's income
Has
limits. If
limits.
you make,
Have
if
ceiling.
you if you make 129 or 230 combined income, you no longer qualify. But there is, they call it the rich man Roth, and I've put a lot of money into this strategy is using life insurance. It's called the life insurance retirement plan, where you put money in a life insurance, and you can do it for 10 or 15 years, and you can dump a lot. I mean, there's no limits. It's not like the IRA where you can only put 6,000 a year. You can put 10. I'm actually putting 20,000 a year into my life insurance retirement plan. Now, when I hit 70, because I want to work a little bit part-time until I'm 70, and plus my husband is older, so he's retiring younger than me. But anyway, when I retire, I will have $180,000 coming back at me, and I do not have to pay any of that towards the IRS. Zero taxes.
Yeah.
So yes, you have your 401ks, but you know that if you have $1 million in your 401k, fast forward 10, 15 years, do you know how much of that money you're going to get to keep? Do you think the taxes are going to
Right.
stay at 30%? What if taxes are 50%? What if every time you take money, you have to pay half of it to the IRS? We don't know. We don't know.
Yeah.
I know there are three reasons why uh, taxes have to go up. Number one, we are in debt up to our eyeballs, $30 trillion in national debt. Every dollar that we collect in taxes, most of it, 90 cents, 92 cents go to Medicare, Medicaid, Social Security, and the interest on the national debt. We're not even touching the principal. So I don't want to bet all of my eggs into that basket. So I believe that you have to have real estate, create passive income with that. The 401k, which, when you take out, you're going to have to pay taxes. But then also try to do something where you don't have to pay taxes when you take that money. And create an income that you can never outlive. My income from my LIRP, it has to come to me. It's like a pension. It has to come to me for as long as I live. There has been a shift between plans where the employer had the responsibility, the defined benefit, the pensions. Nobody does pensions anymore. I think only the government, municipalities, right? So nobody's doing pensions because it's a big liability to the employer. I'm supposed to pay you if you live till 100. Nobody's doing pensions anymore. Well, I'm here to tell you that you can create your own pension through annuities and life insurance. You can create a live stream of income that you will get guaranteed for as long as you live. So there's a lot of different ways these days to invest in different animals, in different assets, in different categories. That's what I endorse 100%.
So I have a question for you. You said, annuity, life, life insurance annuity programs. What do you tell us a little bit about your take on whole life as it relates to that as well? Because I think, this is something that we need to be sharing with people too. I have 7 whole life insurance policies, life insurance policies.
Wow.
And I use those policies to invest in real estate notes. And the reason why I'm bringing this up is I'm bringing up whole life and I'm bringing up investing in real estate notes. This is, another avenue. This is another strategy, in bringing in, because some of the people that are listening are entrepreneurs and they're saying, well, maybe I don't have a 401k. Maybe I'm not taking a W-2 salary, and I don't have a 401k program. So I want to give them another opportunity. But tell us a little bit about the difference between, and we have 5 minutes left. So tell us about the difference between an annuity life insurance policy and a whole life insurance policy, as you see it as a certified financial planner.
So a whole life insurance policy is basically a guarantee. It's guaranteed. Okay. So if they tell you they're going to, it's like putting your money in a CD. If they tell you they're going to give you 2% for 18 months, by golly, you're going to get 2% on your money for 18 months, rain or shine, whatever, right? On a whole life policy, they usually guarantee about 3-4%, and they give you that money, and you pay it for a certain amount of time, and then that cash value is in there, and you don't. After a while, the policy, you can take money out of the policy. So a lot of the times, this is the concept of banking on yourself. When you have multiple insurance policies, you can utilize money going in and out of that policy, whatever you want. It's kind of like a self-directed IRA. I am a big proponent of the self-directed IRA for real estate purposes. I mean, you can have a self-directed IRA, put $300,000, hire a company to find you property, rent it and manage it for you, and sell houses, buy houses, put money in and out of the IRA. And there's absolutely no taxes, and you're deciding what to do with that, right? On a life insurance policy, if you do either a whole, I actually prefer the index universal life, because on the index universal life, you're going to get more of like a 6-7% interest rather than 3-4. So you get actually more returns. But on a life insurance policy, you have no limitations as far as 59.5 is concerned. You know how with like traditional IRAs, 401k, SEPs, you cannot touch the stupid money until you're 59.5. I'm like, dude, what if you want to speculate with that money and invest in it, make it grow? With a life insurance, you can do that.
Yeah, you can.
There's no penalty.
Yeah.
Exactly. You don't want to pay a penalty. So with a life insurance, you can do that. You can take the money out. Also, in a life insurance, there's absolutely no market risk. Absolutely no market risk. Because I mean, I don't do variable. I do either whole or IULs, index. So it doesn't matter what happens to the market. You are never going to lose any of your money. You actually can make money on a loan. So let's say I'm making 7% on my IUL, and they're giving me a loan for 3%. If I make 7% and I'm paying 3%, I'm actually making 4%, because they kind of deduct it, right? So you could be buying a car, driving it up and down the highway, and making 4% interest on the car just because you banked on yourself. You took the money out of your own insurance. Yeah.
No, I love it. What we did. One quick story is I took $10,000 out of my whole life policy. I get 6% of my whole life policy,
Yeah.
so I took 6% out, and I mean I earned 6%. And I think one of the things too is that people need to understand is that when I say I take 10,000 out, I really don't. It still compounds while I
Yeah.
use again, because technically I'm borrowing from the insurance pool.
Yeah. So
And
there's a sub
so
account. There's a sub account. You get the
right.
money from the insurance company,
So
not from your bucket.
right. So instead of my 10,000 coming out of my bank account and gone,
Yeah.
my 10,000 stays there. It compounds, but I have the ability to
Mm-hmm.
draw against that cash value, and I
Right.
draw that from the insurance pool, the sub account, and that account is charging me 5%. Well, what I did is I bought a house in Thayer, Illinois, for $10,000, and I sold it on a for sale by owner as is, and I'm receiving $584 a month. I broke even at 18 months. I have a 10-year loan on it, so every month after that, I'm receiving, and I'm charging this borrower 8.5%. So every month I'm receiving 8.5. I'm paying 6. I'm sorry, paying 5. I'm still earning 6 on the money that's already sitting there, right? And if
Yeah.
I decide I don't want to pay this 10,000 back, which I do, right? I am paying it back with the payments and stuff that the borrower has sent to me. But if I decide not to pay the 10,000 back, then my family will receive 999 or 900. Oh my gosh, what's a million minus
And
$10,000?
90.
It's so nominal. I can't even tell you what it is, but they'll receive the
Yeah.
$1,000,000
So
less
they'll
that
receive
10,000.
$10,000 less. Yeah.
Yeah, yeah, and but I'm
Yeah.
going to pay it back. But
And
the point.
what you did there is opportunity cost. Yeah.
Oh yeah, absolutely, absolutely. And so we
You
just
double
wanted to
dipped with
share
your
with you.
money.
Sabrina's back on, but so she's letting us know our time is up. But we just wanted to share a couple of things. I love Ava again. 401k, take the match all the way up to the match. Get involved in some real estate. I know many of our ladies have talked to you about real estate. Talk to your financial advisor or Ava. You can reach out to Ava
Call
about
me. Yeah.
life insurance policies, right? Life insurance policies. Think about notes. Think about all the different ways that you could be utilizing your financing. And one of the things I'll say just to end everything is put in the chat. Even if you're watching this on rerun, put in the chat what are you most interested in learning, so that the ambassador board that I run, the Wealth and Investment Ambassador Board, so that we can deliver to you when we do our 1-day summit exactly what you're looking for. So, Ava, how does everyone get in touch with you real quick? And then we will talk about WOIII.
Yeah. So my email is my name backwards, Scott Eva Maria, with an E, Scott Eva Maria @gmail. Or you can call me. I have an Atlanta number. I used to live in Atlanta. My phone number is 770-480-0052. I am offering a free consultation for anybody in this platform. I love helping women. I love seeing them financially fit and savvy, and I can help you with that.
Awesome. We love that. And so stay on just for a second, Eva. So Sabrina, do you want to take it away with our ending here?
Yes,
You're on
I
mute.
will. You
Oh,
may
there you
hear
are.
some. You may hear some little toys in the background because us business women multitask. And I
That's
have
right.
my grandbabies in the back, and I said, "Shh, we have to be quiet. Grandma's doing business." So they stop talking, but they start playing their little instrument. So,
I love
Oh my
I
word.
love I love it.
yeah, okay, but here we go, ladies. So that's flexibility. So here we are. So thank you for joining us today, and we hope today's innovative nuggets of wisdom have inspired you to take action towards an even greater life. Thank you for joining us today, and we come here every week. You can also hit hashtag replay if you missed what these two wonderful women had to talk about, the whole wealth building process and being able to utilize those funds in different ways. I was listening. And for more information, to join us as a moderator, board member, or to attend our annual Powerful Women Summit in August, see our website,
Ooh.
womenoii.com. That's womenoii.com. or contact myself, Sabrina Project, or Miss Crystal Richardson for details. The three of us want to wish you a great week and continue to live each day unapologetically with honor, gratitude, and remember, keep rising because, woman, you are powerful. We will see you next time. Thank you, ladies.
Bye.
Sabrina, bye.